Hi, my name is Steve Nomura. I'm going to talk about how we can analyze rental properties. Let's say this is a one single family home, a rental properties, and purchase price is $150,000. Then you're going to put 5% down payment, that is $7,500. Then you're going to spend $5,000 as closing cost. Then you have $10,000 repair cost to rent out. Therefore, you need to bring $22,500 for these rental properties. Let's analyze this investment of $22,500, are good or bad. Okay, it's not so complicated, very simple, but you have to follow this formula very carefully, otherwise you're going to be messed up. Let's talk about how much you have income and how much you have expenses. Okay? You need to clarify these numbers. Income part, of course, main income is your rent. Then you have if you have a garage in the back, you can charge some extra fee for the garage. Also, if you install the washer dryer in the basement, you can charge some extra fee for the laundry. And then expenses part, you have a tax, and you have insurance. You're gonna pay water, sewer, garbage, and you're gonna pay utility bills, and then maintenance, management, vacancy, and then also if you use the bank money, you have to pay mortgage every month, right? Especially maintenance, management, vacancy. Some people don't take out these three fees, but in my case, I'm gonna take 10% off on each items. Even you have a tenant, but once your tenant move out, you don't have any monthly income. Just in the case, you're gonna take 10% off. Also, even you have nothing to fix right now, but just in the case, you're gonna take 10% off in the future. Okay? Even you manage yourself, you can take 10% off. Think about these items using concrete numbers. Your rental income every month, $2,000. You can charge $50 for garage, you charge $50 for laundry. Your monthly rental income is $2,100. Okay, $2,100. Okay, let's talk about expenses. Okay, tax, $200 a month, $2,400 a year. Insurance, $100, $1,200 a year. Then water, sewer, garbage, $50 a month and $600 a year. Utility payment, $100 a month. Then maintenance, management fee, vacancy. As I said, I'm gonna take 10% off. In this case, $200. Then in this case, let's say you use bank money, then 4% and 30-year fix. Then you put $7,500 down payment. In this case, your monthly payment is $746 a month. If you add those numbers, your monthly expense is $1,796. Okay, you have $2,100 monthly income. Your expense is $1,796. Let's think about cash flow. It's very simple. $2,100 monthly income, $1,796 expenses. Your monthly cash flow is $304 every month. Then your yearly or your annual cash flow is $3,648. Okay, this is annual cash flow, $3,648. Then let's talk about cash on cash returns. We're going to analyze this investment, $22,500, a good investment or bad investment. Your annual cash flow, $3,648. Your total investment, $22,500. Let's divide it. $3,648 divided by 22,500. It means 14.6%. Your cash on cash return is 14.6%. Okay. In this business in this rental business, if you have more than 10% cash on cash returns, you can consider that's a good investment. Okay. Then we have one more thing you can keep in mind as a rental business, rental owner. If you own the rental properties, you can receive lots of tax benefit. The government allows us to take depreciation every year. If you go to county website, you can see building ratio and land ratio. let's say in this case, 80% is your building ratio, then building can be depreciated over 27.5 years. Okay, $150,000 your purchase price, then 80% is your building, means $120,000. This is going to be depreciated over 27.5 years, means $120,000 divided by 27.5. This is going to be $4,363. $4,363. You can take this $4,360 every year as a tax benefit. Okay, even you have $304 or $3,648 rental income every year, but because of this depreciation, you don't need to pay any income tax for your rental property. Okay, this is how you're going to analyze this rental property. Okay, when you buy rental property, you're going to analyze in this way. You're going to calculate income, expenses. You're going to itemize those things, and then you're going to calculate how much you have a monthly cash flow, yearly cash flow, divided by your investment. Then you can see how many percentage you have a cash on cash returns. If that's more than 10%, that might be a good investment rental properties. Please click like and then please subscribe this YouTube channel. Also, if you have any questions, comment, please leave it in the comment section down below. Thank you very much.